What's up, traders? So we're sitting here waiting for the FOMC meeting. It's Wednesday, January 26, 2022. Normally, I do a market update in my Friday live stream and also draw out my research weekly levels on Sundays, but a lot's already happened this week, and I think it bears noting. I also want to look at the correlation between the stock market and cryptocurrency and see how that has held up in this week's price action. So let's back up. What's going on right now in the stock market? Well, let's look at the futures, the S&P 500 E-mini futures, and I really want to note this for where the levels are. So in this week, the weekly levels that I put out, I noted that we were looking at possible support here at about 42.91, let's call it 430 on the SPY. And that matched up with a couple of important things. So for those that don't know, statistically speaking, every other year you get about a 10%, give or take, correction in the stock market. And that's what I've assumed, hypothesized that we are in. Now, of course, when things get a little dicey, everyone assumes that this is the big one. This is the 30%, 40% that everyone either fears or is hoping for an opportunity to load up on their retirement portfolios. But the probability is that this is what it is. Well, as the week went along, we blew past that level on Monday, but we found support right around another key level right here. And what this was the May high, the May all-time high of 2021, and also the launch point here from July. And so that's where price actually decided to come and poke its head down. I was looking for it to possibly come down and touch the cloud somewhere in the realm of 10%, but that's what we had this week. And if you go down a little bit, if you dig down a little bit, you'll see that that level from last year is made a V off the level. Now, within this price action, once it got back above that level I was looking, we had another 50% retracement of the rally, which it started to hold and hang around with here. We were watching this, trading this back yesterday in the Discord. And the real key here was when it spiked out. Where are spikes? There we go. So we had a spike out right here, and this is where it looks like it has defined the support that it wants to hold, somewhere around the 430 level. Now, as we go into the FOMC, we had another attempt to go higher, which was right at the top of the rally. And basically, we've established this range right here. Now, what's going to be really key that I'm going to be looking for is if we can come back and recapture the halfway point of this trend. Basically, SPY 450, S&P 500 futures up to this level, and that really brings us back up to the lows. Basically, this whole inflection point right here, this is going to be key. And what I've been telling people, I made a long thread on Discord about that I didn't share here on TradingViewer YouTube, but in virtually every correction, you get some sort of pullback. Where it comes, you can measure, and that's going to tell you a few things about if it's going to continue or not. A lot of people think that when things get really bad, that's when they need to just cut everything. And maybe if that's what your risk rules say, that's fine. I know that a lot of personalities, Meet Kevin was one that we talked about. He closed out everything earlier this week on Monday on that dip down. I'm going to take a more patient approach because you really want to see what price does when it does the reaction. Just for an example, the most recent instance of that was COVID. Now, again, here is COVID from the all-time high down to here. You had about a 15% move. That's a pretty big move, but it's in the realm of correction. It's not in the realm of crash. Correction is 10%, crash is 30, 40%. And what you got there was you got this pullback. And for about 1, 2 days, maybe even the third day, if you're really looking for confirmation, you had an opportunity at the beginning of March to really sit back and evaluate, okay, what is price doing on this rebound? Well, it held the resistance. It created resistance and held it. And that's when you actually had the huge move down. So go back in time and look at these corrections, and you'll see they all have this significant pullback. And so trying to jump in when things are running everyone else's stops, if you need to get out, get out. But I'm going to wait before I make a judgment about is this the big one when we get this pullback. And that's going to be, as I said, somewhere probably in the 450 range. And at that point, I'm going to look at some trades. And based on how those trades do, if the bullish ones work, if my portfolio keeps going up, if the bearish trades work, then that's going to tell me something about what the market as a whole is likely to do. So that's what I'm waiting for really here. Now, let's see how the correlation between Bitcoin and the S&P is playing out. Now, I've been talking about this since December. It was only in maybe the beginning of this year that CNBC and all the other financial media started really catching up to it. But now everyone acknowledges that the stock market and cryptocurrency, we'll use Bitcoin as our proxy, are responding to the same fundamental factors, that of interest rate sensitivity, risk on, risk off. So the top before we dipped on both, here we have the 20th of January, about 11 a.m. That was where basically we had this little rally there on, I believe it was Thursday, and both topped out. Both came up to a top and then both fell. Now, today on Monday, the reversal is what I want to pay attention to here. Let's get these matched up for time. So if you notice at 8 a.m., Bitcoin, cryptocurrency, actually started its turn up. The turn in the stock market didn't happen until about noon. Now, they both topped out about 3:30 and then sort of just kind of danced along there. And the price action is very much the same. So the correlation still persists, but I will say that cryptocurrency exhibited a little bit of thinking on its own and turned around a little bit quicker than did the stock market as a whole. But overall, in the near term, medium term, however you want to call it, they are still moving together based on the same factors. And I expect as we go into this FOMC meeting that they're going to move once again in tandem as people look at interest rates. A quick note why that is, well, simply put, the reason that cryptocurrency has gone up so much is not because people are afraid of inflation, it's because cheap credit money has found its way into cryptocurrency. You can take out a loan, you can borrow some money, and you can go deposit it in Coinbase and buy whatever you want. And that has had an effect. This is what institutional involvement does. And as interest rates are expected to rise, there's going to be less of that cheap money going around. And it's just less bullish for cryptocurrency, growth, tech, all these other more speculative risk investments. So be patient. Let's see what happens. And I'll see you in the next video. Trade wisely.